if you become overly fearful when you've had a losing spell, then that's going to cause you to do what? Hesitate on trades, bank profits too soon, move your stops up too soon, all those sorts of things as well. So we can't trade with no emotion, because that's impossible, because we are human. But what we can do is try and desensitize the emotional range.
Sitting down today with Charlie Burton, looking forward to talk about his trading style, of course, and has a lot of experience in the market, so it's going to be a good chat for sure. So Charlie, welcome on the podcast. Good to have you here today, and looking forward to discuss trading.
Well, thank you very much for having me on, and looking forward to having a chat about the financial markets, of course.
We got to start from the very beginning. I want to hear about what got you in the trading space in the first place.
It was a long time ago. It was 28 years ago now, and so I was in fund management anyway, so I worked for old mutual fund managers, and I used to advise financial advisors on our funds. And one of my financial advisors, who I got to know well over the years, said to me one day, he said, Charlie, he said, I'm going to go on a 4-day trading course learning to trade US stocks and options. He said, do you want to come with me? I thought, well, that sounds interesting, because although I came from a fund management background, that's not trading, obviously, and so it's very, very different. So I went with him on this course, just showing us the basics of essentially buying the underlying stock and writing covered calls, right from the stock finding process, looking at the fundamentals, and then taking it across to the charts, and then looking for stocks which are starting to trend, whatever, and then writing covered calls against those. So that was how I started trading. But you look back, and it was very basic, and I had to pay someone to come to my house just to show me how to place a trade. So I paid someone £250 at that point, whereas now you can just go onto YouTube or whatever and find so much out for free. None of that existed back then. So, even when I started, I didn't know what a market, limit order was, or a buy stop, whatever. I needed to look into all of that as well. So yeah, it was very different back then. And for an example, when I opened my first brokerage account, the account opening process took 2 months. Can you imagine now, when someone online open an account and, it's all done in 5 minutes, upload your documents online. No, the documents that I was sent from America were about this thick of stuff I had to sign, and, so very, very different world back then. And so yeah, that's how I got started. I never saw trading I didn't get into trading because I didn't like my career and I wanted to become a full-time trader. I did it just purely out of interest on the side of my career. I enjoyed my job. So I never intended on becoming a full-time trader, although I did in late 2001. But it wasn't my intention. That was just circumstantial that I ended up leaving the fund management industry and then going into full-time trading. But no, it was purely out of interest, and that's how I got started in trading.
How was the learning curve back then of you trying to learn to trade and eventually making it to becoming profitable with trading?
Yeah, the learning curve, I guess it's longer because I had a full-time job, although my career, even then, I would have a couple of days a week that I'd be based at home. Not that I was sitting here trading, or that time I was not day trading. Let's make that very clear. It was all swing trading. That first 4 to 5 years was certainly the first 2 years was swing trading, at least. And so, yeah, I guess, it's a long time ago for me to remember, but the learning curve would have been quite long. Bearing in mind, I would be placing a trade and then trying to hold on to a position for a good few months, because you're writing a covered call against a stock that you own. So you're not trying to get in and out after 3 weeks. You're usually trying to be in it for a couple of months at least to collect some premium on it. So yeah, but the funny thing is the learning curve is the same from when I got in 1997 to if someone gets in now. The same things occur to me then as that are going to occur to someone today, and that is I went through the early stage of trying to just understand, the options market and the stock market, and then deal with my own demons, greed, fear, all of that sort of stuff. I was more greed based, so quite quickly, in relative terms, I discovered I didn't need to keep on doing covered calls. So why don't I just buy a call option? I can get much more bang for my buck and not own an underlying stock and go for the bigger return. So that emerged within that first year, and so greed took over. So it's no different back then. I just didn't have any. There was no resource. Everything that I was doing, I was on my own and cutting my teeth and having to learn myself. There was no YouTube. There was nothing like that to learn from. So yeah, it was a learning curve, but it's the same as everyone else experiences. It was you got to find a lot. You learn a lot about yourself, and so some people, as traders, they realize that they gravitate more towards fear, and others will gravitate more towards greed. And I certainly gravitated towards greed. And so, of course, therefore, I blew up an account within my first year because I got greedy. I did quite well and then gave back all of my gains. So
Interesting. How did you recover from that, and how much money did you lose blowing up that account?
I lost £240,000, but I had made 200,000. So what I did is I think it was £40,000 into a trading account at the beginning, traded it up to 240,000, then lost pretty much the lot. And that was, so people say, oh yeah, but you turned 40 into 200, but the cracks were there. That was luck. That's because I didn't know anything about at that stage. No one had taught me about risk management. So I was sort of risking half of the entire account size on any given trade. So you've only got to have a few trades and very quickly it's going to accelerate up. So I could have very easily quit at that point. The pain of losing £250,000 when you're very fragile, you don't realize it at the time. You're pretty much within my first year of trading. Yes, it's not my fault. I'm not full-time trading. I had a good career, but it still affects you. And it still affected me at that point to have seen all of that money that you've got in your trading account and then see it all wiped out. Literally down to the last $1,000 is what I had in that account when I blew it up at the beginning. I could have very easily walked away and then just said, well, I'm done with this and never come back to it. And I think I did take maybe a month off. Maybe I certainly took a bit of time, stepped away and just got engrossed in work. But there was something within me that said, look, must have done something right to have turned 40,000 into 240,000. And I was really enjoying it, and it'd be a shame to just give it back and to not continue with it. And so I guess that determination kicked in for me to think, no, I want to see if I can do this properly and see if I can do it again over a longer, more sustained period. And so I got back in the saddle. But I could have very easily given up. It was painful. Of course, when you take a big loss, it's hard. But something within me said, no, you've got to keep going.
What do you think you changed from trading that account and then trading after you blew up the account? What was the things that you kind of changed and replaced in your trading?
Risk management was the number one, realizing you can't bet your whole account or half of your account on a single trade. So I realized that, okay, right, there's something in this risk management thing. I thought it didn't apply to me. And I think a lot of people feel that way as well. They think that certain rules don't apply to them. And certainly I thought, I'd heard about trading psychology, but I thought, well, that doesn't apply to me. I'm a successful in my career. I don't need all of that mindset stuff. And then you realize you do. And so, and I realized that the greed side of my personality needed to be reined in, and that if I carried on down that greed side approach again, then all I'm going to do is the same thing again and I'll blow up again. So those were the things that I was looking at that stage, is how much I was risking per trade, massively bringing that down. And also accepting that if I allow my natural overconfidence to creep in, every time I was getting overconfident, what happens is you take trades that you shouldn't otherwise be taking. You put a bigger position size on that you would otherwise do, and then you give back any of your prior gains. And that was one of the things that I realized fairly early on, that if I could maintain more mindset discipline, that my equity curve stood at actually a better chance of sustaining an upwards trajectory.
Has your trading style changed a lot from the very beginning, or is it still the same kind of principles you're still looking at?
Well, I don't trade individual stocks anymore. So, yeah, of course, your trading style is going to evolve. Mine has, in many regards, has changed. One, from the instruments that I trade. So I started out trading individual stocks. Then I went on to trading ETFs like the S&P, the SPY, QQQ, NASDAQ, and then on to trading futures and FX. So the instruments have changed. But interestingly, yeah, some elements of style have changed. Like during the great financial crisis back in 2008, 9, 10, I was predominantly day trading through there. I didn't do any swing trading for 2 years or so because the ranges got so big, the volatility was so wide, that the price ranges were so big that I wasn't bothered about swing trading. An intraday move was the size of a swing trade today. It seemed at that time. So of course my trading evolves and changes, and still changes to this day, with what's going on even right now with the new Trump administration. So yeah, you do change slightly, but as far as some of the fundamental aspects of what I use when I'm looking at a chart, yes, there are patterns that I've introduced, because you see stuff, as the years go by, you see patterns that you identify, and you think, I've seen this sort of price action before, and then you realize you can put it into a strategy. But at its actual heart, I still use price, trends, moving averages, which I remember putting so a couple of moving averages on when I first started trading, like a 10 and a 20 and a 50 and a 200. That was it. Those were the moving averages put onto a chart. And in essence, a couple of those of the periods have changed of some of the moving averages, but in essence, I still use moving averages, and I don't use them for crossovers and things like that, but I use them for visual confirmations of what's going on, and use them as support, resistance, as dynamic trend lines, and all these things. And that's not changed from the late 90s. So there are certain things that I still use today that I was using back then as well.
How would you describe the mindset that you need to succeed in trading? Are there like a few traits or a few things that you think you need to make a big difference on your results as a trader?
I think that I always say that a trader needs to maintain a very narrow emotional range. You hear people say over the years, oh, you need to trade without emotion. I believe that's impossible, because we're human beings, and we are, as I always say, we're emotional creatures. You can't trade without emotion. Even if you're trying to trade with an EA or automated, you're still going to have emotions, because you're still going to be looking at the trades, even if it's executed that way. And then you're going to tamper and interfere with the very system that you've got. But what we can do is try and desensitize our emotional range. And so I think one of the best things that a trader can do is to work on their mindset in order to do that. Because if you're getting overconfident, as I've talked about previously, when things are going well and you're having a bit of a winning spell, then you're just setting yourself up, if you get overconfident, for then making mistakes, like, doubling down on trades and over trading at that point, because you have become overconfident. And likewise, if you become overly fearful when you've had a losing spell, then that's going to cause you to do what? Hesitate on trades, bank profits too soon, move your stops up too soon, all those sorts of things as well. So we need to we can't trade with no emotion because that's impossible because we are human. But what we can do is try and desensitize the emotional range. And the better that people are at desensitizing their emotional range, so they're taking out the troughs and the peaks in their emotions, then the better you are going to be as a trader. So that was what I would say. The best thing you can do is that, because then you're not going to hesitate. You're not going to bank profits too soon, because those are all emotional things. They're drivers that are coming from your fundamental emotional backdrop. That's where all that's coming from. Get rid of all of that. Get rid of that emotional range. Now, how do you do that? One of the ways, the most simple way of reducing the emotional sensitivity to the markets is just to trade with smaller amount of risk. That's one thing that anyone who is struggling with emotions right now, desensitize. One thing I see of a lot of retail traders, they just risk too much. So if you're risking too much, your emotions are going to be higher. So reduce the risk and you can reduce the emotions. That's one of the quickest ways to do it. Now, sometimes you get a trader who's quite emotional and they're already risking quite a small amount. Then that might be because they're quite new anyway, and so they're still in their early development curve. And so that's okay. Still reduce your risk. The markets aren't going anywhere. As you get a thicker skin, a hardened skin towards the markets, then you might be able to creep that risk back up to where you would like it to be. But you have to recognize who you are as a trader. Are you fundamentally greed-based or fear-based? And then try and work on that and reduce the range. And I think if people can do that and trade more objectively, then they're going to be a better trader.
There's always the issue of expectations too, especially for new traders, where they expect to make a certain amount of money per month, or they target a percentage per month that they want to achieve. How do you deal with those expectations in trading?
I think that again, that's a restrictive, very, very restrictive, because people are treating trading like it's a job, like it's a career, like it's, you're going to get a pay packet at the end of the month. And if you approach it that way, well, what happens then if in your first week you've had a losing week? You're then thinking, well, I need to make 5% a month, and I now need to make up for the fact that I've not made any money this week to get to my 5% or my whatever amount. It's ridiculous. You cannot compare trading the markets to a job. And for a lot of people, actually, they might, if they looked at their overall P&L, it's the old 80-20 rule. You get 80% of your gains from 20% of the activity, and that can come through the course of a year as well. I'm not saying you can't make money every month, but if you put that pressure on yourself as saying, I need to make this amount per month, per week, per day, then that's not good, because you're not going to be trading objectively. So you need to park that and appreciate that 1 month you might be flat, and then the next month you might have a bumper month and do really well. So I think having targets is a dangerous thing, because it creates emotions by itself. Have a loose target of how much you would like to be achieving over the course of a year, but appreciate that in the financial markets might go quiet for periods. They might go super volatile. All these things that are outside of your control. All you can do is control the controllables and deal with your processes, and accept that there's going to be months that you're just out of sync with what the markets are doing. If you put a target on of what you're going to do, that's dangerous. And just see trading as a long-term endeavor. It's not about how successful you are today, this week, next month. You're in it for the long term. So try and desensitize the amount of focus you're putting on how much money you want to make today or this month.
Definitely. I feel like with the current market context we have to talk about how do you trade with the current market conditions. You have Trump announcements, you have speeches, you have a lot of stuff that kind of moves the market all over the place. How do you adapt to these kinds of situation in the market?
It's very different. And even I'm, with all my experience over the years, adapting myself at the moment to this new world that we're in, because even from when we're doing this interview today, yesterday evening, the evening before that. It's relentless. I'm here in the UK, and so some of these announcements are coming out overnight. And so, what are you going to wake up to in the morning? How the market's moving, because there might be tweets or whatever that have gone out, or so one thing I think that is a simple trick that a trader can do is just to look at your stop losses and maybe have wider stops, because to take into consideration the increased noise that's there. So an example yesterday would be, it doesn't matter about the dates, but at the time of filming, the stock markets were down, then they rallied, put in a big bounce and went green, then turned back to red again by late in the last half an hour. And so I think that if you're in a position, then generally speaking, widen your stops beyond what they normally would be, just to try and account for the noise. Reduce the position size and have a slightly wider stop, just to try and cater for that sort of noise that we're getting during the course of any given. Again, depends on whether you're a day trader or a swing trader, but the same principles apply. If you're an intraday trader, maybe have slightly wider stops than you would normally do, just to deal with that noise. But it's the same for swing trading as well.
Do you feel like there's a better advantage for day trading or swing trading in the current conditions, or is it better for people trying to catch smaller moves, or more looking at the bigger picture, or is it like a difference, or is it the same thing?
I think that in some regards, it's good to be in and out. And I don't mean off an intraday trade, but even from a swing trading perspective, in some regards, because even on end of day charts, markets having a bit of a run, and then they'll go and do quite a big reversal. So in some regards, banking may be a bit sooner than you would otherwise have done, or taken a portion of your trade off. Maybe for some people might be a better thing, given the volatility and the way the markets are moving around. So that would be the main thing, and it's the same for intraday as well. Especially for intraday, you need to be a bit more on it, because of the risk of intraday reversals is very high at the moment, based on, look, up until 2 months ago, we just had to deal with economic news releases. Now we've got economic news releases, plus we've got Donald Trump, we've got his team, who could all be tweeting or giving news press conferences at any time, which can dramatically change the course of the market. So I think for intraday traders, they've got to be much more on their game with regards to anything can come out and the markets can turn. But I'm more of a swing trader these days, but it still is going to affect a swing trader, because you can be in a nice position and then in the space of half an hour, the market's all turned and your nice looking swing trade doesn't look quite the same.
Right. I feel like a lot of people are seeing moves that start and then not finish in their favor. Like they just kind of go back against them really quick. And that's the issue people have.
It's just the relentless nature of what's going on. We've got geopolitical events, obviously, with the Ukraine-Russia war. We've got the Middle East uncertainty still. You've got a US that are looking to reduce their amount of debt. So they're making some quite dramatic moves with regards to their own economy, tariffs, all these things that are all being thrown into the mix, which you're right, that you can be in what looks like a nice position and then it all changes. But yeah, one thing that I would say though is it's certainly keeping things interesting. So it's a lot less dull than it was, last year. That's for sure. Whether that's a good thing or not, I don't know. But yeah, it's certainly keeping things very interesting, and certainly, on a personal level, I'm having to spend more time keeping an eye on the markets than I was last year, because the markets, you get into the thick end of the US session, so like the US afternoon, where normally in FX, you get past the London FX close, and they're all pretty much dead after that. Not now. They're still moving a lot of the time, and obviously the stock market. So we're certainly seeing some differences there. So I'm having to keep an eye on the markets a lot more. It's not that it's necessarily going to change what I'm doing, but I'm having to monitor all my positions more than I would otherwise be doing. But yeah, and it's different.
Knowing that you've been trading for many, many years now, what are some things you do to kind of keep improving yourself or keep developing your trading over time?
I don't want to sound arrogant, but I don't. I'm comfortable with what I do, and so all like the all I can do is follow my processes, follow my trade plan, and that's the number one thing that I'm constantly trying to do is just stay with your plan. And so am I trying to evolve and improve my strategies? And no, I've been trading with my overall trading strategies and my approach to the markets for a long time. So I'm not looking to evolve per se because I'm quite content with my approach to the market. So, but what I do need to do is, like with any other manual trader, is to ensure that I am trading my plan and reviewing the plan constantly, and especially at the moment with the amount of news that's being thrown at us. So for me, it's just okay, staying with the plan, and as you've already alluded to, with changes that are going on in the price action and with news and new information that's coming at us fundamentally, geopolitically, whatever, then I think you always have to be willing to change your plan at given points. So for example, I might want to be trading within a given trend. And if we take an example, so if we take the euro dollar, so since September of 24, it all rolled over like many of the currencies and developed quite a fierce downwards trend right away into January, February of 25. And yet, as I speak to you right now, that trend is coming into question with some of the reversals that we're seeing. So there has to be a point where you say, right, okay, I'm out of that trend now, and are we still in that trend, or is there potentially a new emerging trend coming in a different direction? So, but that's where all that work comes in. So I'm more process driven, and that's how I'm measuring how I'm getting on, not results driven, and not it's not about trying to find a better strategy or improve my strategy. I'm happy with that. It's just about following the plan.
Some people might worry that their strategy or their edge eventually will kind of fade out and not work anymore over time. Is that something you think about, or is that just not a concern that much?
No, it's not a concern. And the reason being is that most of my analysis is coming from a top down. So I'll start with a quarterly chart coming down to a monthly, weekly, daily, etc., etc. So the overall trends and the price movement that goes on doesn't change. Markets trend in one direction or another. Where people's edge can go is because they're trading with very tight rules, specific rules. It might be on a intraday chart, and they've back tested it for the last year, 2 years, and it's all worked, and it may have been working quite well, and then it goes into a drawdown, and it may just be that because of the volatility, for example, volatility itself can upend a strategy, and a strategy stops working. So that sort of thing can happen. But because I'm not trading that tight, in that it's not some intraday strategy or even a very specific strategy off a 4-hour chart with all the little rules, that generally speaking, my approach I've been using really since prior to the financial crisis. So I've traded through one of the world's biggest financial crises and everything that's gone on in between that, with one of the biggest bull markets of all time as well. So no, I don't see my approach as particularly changing. Where some things happen is, you mentioned earlier on, you get runs, and of course you go through periods where price then just fizzles away and just rolls over and doesn't quite get, if you, I use targets, doesn't quite get to your target. So so that sort of thing happens, but I just go with that you can't, every trade, you just can't, they're not all going to get to your targets. So but I just have to deal with that. So in the main, I don't see my approach changing, because it's really is just price. Price is going to either consolidate and go sideways, or move up, or move down. So no, not really.
All right. So if it's logical based on the context and based on the, like you said, the multiple time frame analysis, then it definitely makes sense to keep it the same. Okay.
Yeah.
What can people find you and connect with you after this interview if they want to reach out or see your work or just connect with you?
Check out my YouTube channel. I do have a YouTube channel on YouTube. It's Charlie Burton Trading. So I put out 1 or 2 videos a week. One of my chaps puts out shorts. He clips up interviews that I do quite regularly and clips them into little shorts and puts those out. But I tend to put 1 or 2 videos out a week, which I'm usually just covering off things like trader mindset and answering people's questions. So people write in on YouTube saying, "Oh, Charlie, could you do a video on this or that?" Then I'll do that. So it's probably one of the best ways to get in touch and see what I have to say about these various topics.
Awesome. I'll put the link below for that. I've seen your channel on YouTube. It's been a lot of good content there for sure. So people can reach out to you there directly and see your videos there. And Charlie, I appreciate your time here on the podcast. It's been good to have you here. Good to talk trading, and hopefully we'll have you back in the future and discuss more trading in the future.
Well, thanks for having me on. That was nice and short and sweet.